welcome back. I think the last time we discussed was my weekly update on how I made 27,000 in a week as a part-time trader. Now, following that up, I want to show you what I've done from the week of 18th Feb to 25th of Feb, which is the monthly expiry. So as you can see here, this is 18th of Feb. This is where the Nifty is at. This is where I entered the Iron Condor. Iron Condor is nothing but a range bound strategy. Let's say Nifty spot is trading in the middle and you expect Nifty to stay in a range. So how can you take advantage of the range? By selling a put option at the bottom, hoping that Nifty will not cross this. Then selling a call option, knowing that Nifty will not cross the top. However, we don't want this to be, this is essentially a strangle, but we don't want unlimited risk, especially because I am a part-time trader. I cannot look at the markets all the time. So what I do is I buy an out of the money call option and buy an out of the money put option. Okay, so the difference between the premiums, let's say this is 25 rupees, this is 10 rupees, this is 15 rupees, this is 5 rupees. Given that these are the premiums, if Nifty in the next week stays range bound, then I will make 10 rupees here, and let's actually think that this is 15, and I will make 10 rupees here. So per stock I would make 20 rupees per Nifty, but Nifty lot size is 75, so I will make 1500 rupees. Again, this is with the margin is around 60,000 rupees for one lot of iron condor. So it works out to be 2.5%, which is a 2.5% return per week in a week. Okay, so let's see how that went. How do I go about doing that? So I know that Nifty at the end of the day on 18th is about 15,100. I expect Nifty, it is the downtrend. Now it is gone up and then it's correcting back. So this one 15,450 is a decent resistance. So what I did was I sold 15,600 call, and at the bottom I'm looking at, this is a good support. 15,000 is a good support. I don't know if Nifty will bounce up. On the other hand, I don't know if Nifty breaks 15,000. It could come down really fast to 14,700, 750, or 16,000, or 16,000. So what I did was I sold the 15,600 call, okay, and I sold the 14,600 call. Sorry, put. Sell 15,300 C, and then I like always 600 wing, 300 wings, which means I bought 15,900 call buy and 14,300 buy. So this is my, if Nifty stays between 15,600 and 14,600, then I get the premium which I've sold for. But one thing that I was careful is, if the market breaks this down, IV volatility will increase. So what I did was I bought a small amount of 14,500 put, just as a safety in case the market cracks down. So let's see what are the prices, etc., and then we'll see how I went about that. So this is my uh, this is my uh, profit and loss. So you can see here I've sold 14.3, 14.6, and 15.6 and 15.9. This is my initial call, which is in orange. So you can see here that I've sold 14.3, 14.6, 15.6, 15.9. The prices are, this is my trade book. So 14.3 I have sold for 14.3 I have sold for bought for 11.61. You can see here, and this call that I have sold is for 26.875. Okay, this is 26.8. The call is, I have sold for 14 and I bought for 4. I have sold for 14 and I bought for 4. You can see here this is 10 rupees premium. This is also about 15 rupees. Okay, so this is what I did. But the reason why I sold a higher put here is because I wanted to buy a safety. I want to buy a safety 14,500. So you can see here I have sold 750, not 750, more than that. I've sold 900 quantity of puts. So for that I have bought 225 worth of 14,500 at 20 just as a safety. Okay, in case the market cracks down. As you can see here. Then moving on, let's see what the market has done. Next day the market is still within range. It's come down. The next day on 19th there was this big fall and it came down to 14,673. uh, the problem is not the delta, which is that, I mean, the market is still within our range, but the problem now is that the put option has become very more has gone up, but the call option has made us money. So if I look at what the current status was, you can see here the call option has made about 6,000, but the put option is in a loss of minus 38. So I wasn't sure if the markets, but thankfully the 14,500 put that I bought, which is also the one that I initially started up, was about 6,000. So it gave me a good profit, so that I was also a bit more confident in case the market cracks down. But I knew the risks, that if in case the market completely crashes, then I knew exactly what my risk was, because this is a risk defined strategy. So at this point, on the 19th, I realized that the market was going down, and I wasn't sure. I wasn't sure if the market will move down further, because it is quite close as support. So what I did was I rolled down my calls. You can see here. I rolled down my calls to 14,100 and 14,400. This is what I did. This is what I rolled down as the second option. I rolled down the calls, and I also rolled down the puts to, this is my second, this is what I did as an adjustment. I rolled on both my call and put. Okay, so now my uh, my roll down was from 14,600 to 14,300 and 15,600 to 15,400, because the market had actually not breached 14,600. So I was quite, I was partly confident that the market will bounce back. So if it bounces back, I didn't want to roll my call too much. So given that, we'll continue to see what the market did. Then the market bounced back, thankfully. So then the problem was that I had to manage my call, but I was not worried about it, because 19, 20, this I had sold here. This is Thursday, Friday, Monday is already Tuesday. By Tuesday, my puts were also in a puts were also in profit. So when the moment the market opened on 15,000, I was quite the market went up. I was quite confident, but I was also sure that the market might not. Okay, I was thinking that market might not go above 15,200. So what I did was I sold 15,200 calls also. So I sold 15,200 calls just as to make some money. So you can see the initial leg, I had booked a loss of 25,000. Okay, I closed those positions, completely shifted my range below. Now the second part was, now I was able to sell both. I was able to sell some 15,200 call options and 15,000 call options. Because I was sure that in case the market fell down, I wanted some more buffer. So what I did was I had sold 15,200 and 15,000. So you can see here 15,200 I sold a lot, and 15,000 I only sold 225, because I just wanted a little bit of buffer. But if the market shot up, I was going to close to 225, 15,000 call immediately. So this day I had, when the market opened below, I was not sure, so I had sold this call to protect any further downside. The moment market was going up, it hit my stop loss, and my 15,000 exited with a loss of with a small loss, and I was okay to take that loss. My 15,000 loss was minus loss was about 1,700, which is very small compared to the rest of the profit. So if it goes up, this put will make a lot of money. So because I was in quite a bit of profit, I was okay to lose this. And then I had sold 15,200 call, and because of time decay, the 15,200 call, I had sold it 15,200 call on the 22nd. Because of time decay, I had made money and I closed it intraday itself. Because the market did not fall much. Okay, so now what I have my position is I have 15,400, 600. Next day, thankfully, the market gapped up. My 15,200, if I had kept that 15,200 or 15,000, that would have been in loss. So thankfully, I had closed both of them because it hit my stop loss, and I would not have carried overnight positions in both of these because I was confident. I was not sure because I never keep my overnight positions more than 200, 300 points, closer than 200, 300. So all I had was 14,500, 14,006, 15,5, 15,4, 15,6, 14,6, and 14,3. So if you take a look, so those things still made good money. Overall, the second leg, I was able to make 44,000. So totally, I made 17,000 this for this week. So yeah, that's how I adjusted my iron condor. Just to recap, the points that I would suggest is, remember that when you're choose which side the market is going to go. Make some sort of directional call here. I knew 14,600 was a good support. As you can see here, 14,600 was a good support, and I put it at 15,600 was hopefully a good support, good resistance at the top. So when the market moved down, I moved the whole. This is where I started with, and then I moved it down to 15.4 to 14.3. This is my second range, and once I made this adjustment, the market was within this range. So when market makes big moves, normally it will stop and consolidate. It can't keep falling or keep going up. So when you make adjustment, the second adjustment is normally just works out. But may make sure not to adjust it too much. So 15,600, when the market is close here, don't adjust it here because that would be bad. So adjust it just a little bit, so that I would suggest adjust only up to 75%. If this is, let's say, 1,000 points, bring it down by 250 points, 200 to 300 points. That's all, because you're worried that the market will bounce back. Okay, so that is all I have today. So I've made about 17,000 this week. Again, remember that I'm a part-time trader and I don't trade as much. If you can see here, all I've done is all I've probably taken is 11. One day I took 4, the other day I took probably another 4. So only 2-3 days of trades. Okay, hopefully what I am doing might help you. Don't worry, if there are losses, I will post them also, because at the end of the day, I'm not looking to just share only profitable trades. I'm also trying to share whatever I've done. I'm sure I may do some mistakes and I will learn from it, and hopefully you can learn from my mistakes also, and that's how this should hopefully work. Okay. Okay, so thank you everyone for watching this. If you have any doubts or suggestions, always feel free to comment below. Okay, catch you all on the next week. Bye.